Happy Friday, traders. It is Friday, the 2nd of June, 2023. It's 8:03 a.m. Chicago time. This is episode number 2475. A reminder that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, looking at the convergent trading pre-market summary sheet, we know that the jobs reports come out. I wasn't here for it, unfortunately. It's part of the pleasure of having kids. Just couldn't get here in time. But it came out pretty strong. It's a blowout number, essentially. 339,000 reported versus 190,000 expected. The prior is 294. So the job creation capacity of the U.S. economy is unabated by the Fed or whatever. The unemployment rate, however, ticked up, so that's really important, and I think that's what the market is responding to. 3.7 prior, 3.4% unemployment rate, and then for May the expectation was 3.5. So we had, a bit of a pop there, and the market's digesting that information. It's also digesting the fact that the Senate passed the debt ceiling bill very quickly. Chuck Schumer and Mitch McConnell were able to get it through, and it's supposed to go to the president's desk for a signature that would put it into law today. And so that's a relief for the market as well. NVIDIA's next-gen AI chip will continue to be manufactured by TSMC, as CEO Huang said in response to market concerns over the partnership. GM, POSCO, future to expand EV battery supply chain in North America. But we have a risk-on sentiment, pretty strong risk-on sentiment today. We had a rally day today, which, by the way, was not the primary expectation. The primary expectation yesterday, if you recall, I talked about this. I showed it here, that the market is likely to trade to balance out for the next leg, whatever that is, and it still had some room down into 41.50, and it reversed yesterday. It was pretty strong rally, very typical rally type day, and so we continue today. So the S&P is in a multi-distribution profile this morning, kind of pushing it to balance, really. The ES has established point of control at 49.50, which is 42.50, the mid-century figure, and is 100% long in terms of inventory. We never look back at the close or settlement. 28 points of range, and the volume's 244,000, which is a pretty good volume today. With this big release out of the way, the market is free to run on its own power. Next week, when I look at the high impact numbers, we don't have, I don't see anything too gigantic, especially from the U.S. ISM services on Monday, and then balance the trade, and that's it from the U.S. as far as top tier releases. There's quite a bit out of Australia next week, some German numbers, Canada, China inflation. So in my opinion, this thing has what it needs to keep running on its own power, as opposed to worrying about what the Fed is doing. Speaking of the Fed, something you should be aware of. If you recall, on Tuesday, I showed this chart, this FedWatch tool, and I showed that the 25 basis hike was 70%. It was up here. Well, 70% is up here, was 70%, and the potential for it to hold, for the Fed to hold on the June 14th meeting in 2 weeks, the potential was only 30%. Over the last couple of days, this has reversed. So you can see currently It's yesterday was 60-40, now it's 65.6 versus 34.4. So you can see the probability of the Fed holding finally the quantitative tightening, um, stopping for the moment and holding steady has dramatically reversed this week, and that's really feeding into some of this rally that you see, along with the good news from lawmakers and so on. You would expect that this non-farm payrolls number would spook the market, but the Fed funds remain the same. The treasuries are basically pricing in that this is not going to change how the Fed sees interest rates going forward. So June 14th, if things keep getting strong and inflation keeps going higher, I'm sure market participants will respond. But to me, it just seems like June 14th, we may be in for a surprise potentially. Remember, JOLTS on Wednesday came in at 10.1 million versus 9.375. That number is supposed to be falling. The number of jobs unfilled or job demand or openings is supposed to be falling as more and more companies put a freeze on hiring and lay people off, so to relieve some of that inflation pressure. So interesting, conflicting information. But what's in front of us today is that we have the market reopening last night and really just taking off immediately in the ES. The ES is on the left, the Nasdaq's on the right, and overall just very, very bullish, right? Both taking yesterday's highs out and holding above yesterday's high. So what is to be expected for today? I mean, if you look at the TPO chart here, yesterday we ran all the way back to that prior high at 42.38.50. We went to 42.39.75, and we closed right on top of balance here. You can see the point of control is right on top of the settlement and so on. Pretty decent run up yesterday in what was a pretty well structured kind of rally. It's if you look at the price action on that rally, it's push, zipper, very few counter rotations, push, zipper, and so on until the end of the day, where the market tends to rebalance and come back a little bit. So yesterday was pretty orderly, but when I zoom out, let me pull up my investor RT composite here. This one's a little bit noisy because I have a lot on here. But so let's clean this up. So you can see here, 42.43 was the last high right in here, 42.43. And I've taken the action all the way from 44.12.50 to yesterday, and what you end up with is a double distribution profile with a point of control at 41.40 right here. So you have something that looks like this, then it sinks, and then it peaks out again at 40.24. So 40.24 and 41.40 are the two distributions we've been stuck in since the drop from August. So what we've done now is we've broken away from those two balance points. So again, we've been trading in a double distribution profile, very clear in between. Hang on, let me pull that profile up. So you can see right here, double distribution profile, boom, boom, and down. And we're working our way down into this valley here where we have a gap, an old gap up in the 4,300. So to me, the 4,300 is pretty much a magnet at this point, barring big news, big something that's unexpected. The momentum is for is very much for the markets to trade towards that end, and that's what I'm expecting, really a continuation of. It is non-farm payroll Friday, and there are some statistical tendencies to this day. The statistical tendency is that you get once the IB is in, it's generally not broken by far, and the action tends to die off, especially coming into the summer. The action tends to die off after the European close. So this is the kind of day where you really, the opportunities, whatever opportunities you have in your trading plan, are either going to come to fruition within the first 2 hours, or this is just a good day to kind of wrap up, go hit the gym, and go enjoy the weather or whatever. Um, it's not a day where you'd want to stick around. But what's important is we have just moved away from this mess that we were in for a long time. So we had multiple boxes that we've been trading here, and we are moving away from them and trading and are trading higher. So this is good news in that it may bring in a little more opportunity. The question is, do we respond this morning? So the key element, the key thing I'm going to be watching out for this morning, let me maximize the ES. You can see the ES, really nice setup here at the 08. Right here, we discussed this yesterday during the Convergent Trading AMA. Really nice setup there, but overall, this is pretty good strength. I mean, you have multi-distribution profile, you have the point of control shifting to the upper quartile of the range, you have the market closing at the upper quartile of the range. The expectation is it's very likely to continue. It did in the overnight session. We're holding above VWAP and so on. So really, it's all about buying pullbacks, right? That's what the market is basically blaring out at the moment. And the question is, do we come in and find ourselves responsive into yesterday's range, in which case we would be looking for it to come back into the 42.28 and the point of control, the attached point of control, 42.26 basically, or do we have a pullback and a continuation? In either case, we're going to be battling this 42.50 mid-century figure, and it's just, this is where we're opening today. So expecting a little bit of noise. We're opening on top of the overnight point of control, expecting a little bit of noise. And the question is, does the market create separation right after the open and absorbing this unemployment news? If it's not absorbed yet, do we create some sort of separation early, or do we just gyrate around the 42.50 and therefore need to chill and just let things kind of play out? I need the market to move away from 42.50 to trade. That's the key thing I want to leave you with today. It's really important that we move away from the 42.50 strike before I can commit to any bias, whether it's responsive selling or more likely buying pullbacks today into the overnight high of 42.57. Does that make sense? Let me know if it doesn't. Looking at the relative delta. So hang on, we're going to look at the NQ here for a second as well. NQ, same story. Let me reduce the opacity of these levels just like that. So NQ, same thing, pretty decent run. The NQ had its point of control a little bit lower on the profile, which is interesting because the NQ, to me, on a relative basis, has already had its run, and it's actually exhibiting a slightly weaker response than the ES at these levels, because the NQ is already pushed much farther than the ES has. The NQ is actually a lot more balanced. So if you look at the profile here, you'll see, yep, you know what's about to happen. This dude is going to be smoking. The NQ exhibits a lot more balanced type of action in the overnight session than the ES does. And so it may be very choppy, especially in the NQ. That chop could be easily could be 20-point swings at a time. So I would, for those of you who are looking at the NQ or trading the MNQ, I would just say, like, monitor your emotional response, your uh, monitor your desire to be right, and monitor your getting sucked into the fact that the NQ is in balance. Despite non-farm payrolls, the NQ is in balance, and it's likely to be choppy on the open. It's basically flirting with yesterday's high. It's got its mid and VWAP on top of each other, and it's crisscrossing those. These are signs, the point of control is in the area as well. Point of control is at, what is it, 14, 5, 10, something like that. It's all kind of together there. These are indications that there isn't an edge that the market is pricing in, and therefore you coming in there and kind of shoving your way into the NQ this morning is extra risky. So if you're trading for me, I would tell you to watch your risk, and I'm going to be watching you. If you're trading with me, for me, I would be watching your performance. I'd be watching to see what would I be watching for as somebody who's running a prop shop, for example. I would be watching to see if you're deviating from your process, your normal process, or your plan, or your risk at all. And if that happens, then you're going to be shut off for the day. This is the kind of action here that's likely to suck people in. And coming into a weekend, it's no fun to go home with a hole in your pocket. Looking at the looking at crude, crude staged a pretty decent recovery after the big sell-off a couple days ago. Yesterday, it rallied pretty strong. It reversed the one-time framing down. You can see crude has been one-time framing down on a daily basis. It busted through the one-time framing down, and as if you're with Convergent, I pointed out that the 7100 is very likely to shut the door on crude. On the way up, and it certainly did. It did a good job of doing that. It ended up pulling back and settling closer to 70 than 71. But crude has picked back up and is pushing higher. And this morning, it has had a balanced open in the first bracket. Remember, crude opens at 8 Central, 9 Eastern, so we're about 2/3 of the way through the first bracket, and you could see that it's already exhibiting balance. So same story there. And of course, the Russell finally had a pretty decent rally yesterday. The Russell's been just such an incredible laggard. Believe it or not, this morning the Russell is the strongest of them all. Look at this thing on a relative basis, day to day relative basis, not on the composite or on the full picture, because the Russell is way weaker than everything else in the big picture. But the Russell has really good separation from its VWAP and mid, has shifted the point of control up, but has not given up the higher prices. So money is starting to flow in. There's a risk on element here to the news that's going on, and the stocks that generally get the early money are in the Russell 2000. They're smaller, higher beta stocks, and that's what we're seeing. So there's a lot of optimism here, and if there's optimism, then you got to watch your shorts in this kind of environment. It is Where Are You From Friday, right? We do this every couple of Fridays. We haven't done it last Friday because I was traveling, but this is a great time for you to pop in and tell us where you're located. Just put it into your live chat. If you're watching this after the fact, put it in the comments, and then folks can look through and see who's around them. If you feel comfortable, please post your Twitter handle or Instagram or Telegram or TikTok or whatever. Don't identify yourself through your email or your phone number. Please don't put emails or phone numbers in here, but do let the other traders in here know where you're located, so maybe you all can figure out how to get together, right? So good luck today. I'll keep this running for a bit so you guys can keep plopping in where you're from. Good luck today. Watch your risk today and enjoy your weekend. I'll catch you on Monday morning. Take care.